Hello traders and welcome back to this very interesting aspect of the course where we'll be trading live. Okay, so I have gone ahead and opened a brand new trading account, live trading account with IC Markets. Okay, and as you can see on your screen right now, this is the account. I just funded the account with $1,000, and when you look at this place where my mouse is, you see that this is actually a live account. Okay, so this is a live account. So we're just going to trade live with this $1,000, experiment everything we've learned in the course so far and see what we can come up with. Okay, now you have to understand that this is the part of the course where you actually put everything you've learned into action. Okay, you have to put everything which you've learned so far into action. And then trading live isn't trading with demo account. Okay, when you start, you quickly discover that trading live is not same as trading with demo account. Okay, the emotions are different, and then emotions can make you take very stupid decisions. Okay, so you have to be calm and you have to kind of understand that I'm bringing in my A game here. Everything I've learned will be activated in this part of the course, right? So the strategy I'm going to be using is my most favorite strategy. Now this is the price action strategy. Okay, so I'm a price action trader. I don't use indicators. Okay, I used to use indicators in the past, but like I said, in some aspects of the course, indicators are lagging systems and they can help you make money. I know a lot of guys who are making money with indicators, but based on my opinion, they are lagging systems and they give late signals, right? Yeah, so that's one thing with indicators. And then you have to understand that everything has its advantages and disadvantages. And one advantage with indicator-based strategies, based on my own opinion, is that they give you very clear and explicit instructions, or more explicit instructions on where to enter and where to get out. Okay, so they are more kind of precise. And then all you need to do is kind of bring in your E game in terms of discipline, right? So you just have to be disciplined enough to follow the strategy. Whereas price action trading strategies might not really give you as explicit instructions as the indicator based, okay? But they're not hard, really. They're not hard. Once you can just put in your efforts, you'll see that you are learning it. So guys, I'm just going to go to TradingView right now, and actually I have been trading for a while, and I have been analyzing the markets and trading. Okay, so a lot of this analysis I have implemented in my other trading accounts. Okay, now you can see this is gold, this is USD CHF, this is GBP CHF. Okay, we can see USD CHF actually predicted that it's going to go up and then break this trend line, which it did, and then come down. It actually did precisely what I predicted it to do. Okay, I'm just going to reanalyze everything, but I just want you to see what I was able to predict. So I predicted that it's going to come, and then after breaking this trend line, which it did at this point, it's going to retest the trend line and then start moving up. Now it has retested the trend line here, and you can see that it's now moving up. Now this is the 4-hour time frame. When you go to 1 hour, you see what's happening, right? So my prediction is that USD CHF will buy and buy and buy. Okay, but of course, you know that the market doesn't just keep going, right? It goes and retraces, it buys and retraces. So that's how the whole thing works. Now GBP CHF, let me see, actually analyzed and predicted that the market would go up here. So I actually had a buy position, and yeah, my buy position took me to profit, and I came out before this sell started happening. So I think I came out around here. I had two buy positions at around here, and I came out around here. So that's one thing to note. And basically for USD CAD, at this point I was predicting that the market would go up, so it actually came down a bit before going up. And I think enough of all this. I'm just going to start with gold right now. So I'm just going to start with gold. Presently I'm actually I'm actually selling gold. Okay, I'm actually selling gold presently. I'm in a trade right now. I think I'm in profit. Okay, selling gold. So hopefully gold will sell. But you have to know that nothing in FX is 100%. Anything can fail, so you better have your risk management in check, right? So I'm just going to delete everything here, and we're going to start from the beginning. So remove drawings, okay, and let's see what makes me buy and what makes me sell, right? And of course you have to understand that we have rules, right? We have rules for our strategies. Remember, now this is my strategy. I call it the trend following strategy, and then these are the analytical rules, these are the entry rules, these are the exit rules, and these are the trade management rules. So let me just go through them once more. Okay, so for the analytical rules, I identify the major trend of the market from a higher time frame. So I start from the monthly down to the weekly, down to the daily, and then 4 hours, and then I draw trend lines. I'm going to do all this with you when we get to the charts, and then I map out major and minor supports and resistance zones, and then I find trend patterns on a lower time frame, and then I use the Fibonacci tools to identify points of positive retracements and wait for prices to retreat to that region. Okay, and then I identify the points of high confluence between the Fibonacci and supply and support and resistance zones, and then my trend lines. Okay, and then I use high time frames to find candlestick pattern confirmations and so on and so forth. So there are a lot of rules. You have these files. I don't want to just go through them again. Okay, so I will take my stop loss to break even when my profit hits 0.8R to 1R, and then I'm going to trail my stop loss after my profit hits 2R. Okay, and then that's my trade management rules. And then for my exit rules, I'm going to place my stop loss below for buy and above for sell, previous support and resistance levels. So I'm going to be using price action for my for my stop losses. Okay, and then I'm going to place take profit at 3R. Okay, and basically these are the rules, and I have my trading plan and also my trading journal. So I'm going to be recording my trades here, and okay, I'm starting with $1,000, right? Then my strategy will then be trend following. You just change it here to trend following. Sorry, trend following. Okay, and then my score should be 8/10, and I don't really need this. I will just delete everything. I'll just leave this guy for now. Okay. Okay, perfect. So why am I selling gold, right? Let me go to the monthly so you can see, and we can see that gold has been on an uptrend since 2000. Okay, since 2000 it's been on an uptrend like this, and it came, then retraced to this point and tested the trend line and then kept buying and buying, and came here, and we all agreed that gold came and did a double top here. Okay, we had a double top here, and then gold now broke this neckline. Okay, so there is a clear break of the neckline. Okay, and you know that this neckline we're talking about is more of a region, right? So let me just delete this guy and kind of draw using this tool. So I'm just going to draw out a region. Okay, so let's say this is the neck region. Okay, so gold came and broke the neck region. Let me just duplicate this guy also. So clone. Okay, so gold came and broke this neck region, and we know that whenever it breaks the neck region, before it continues, it tends to come and retest the region. Okay, you have to understand that the market likes retesting past regions. Okay, past price regions. The market loves to retest, so you always see a retest. The market doesn't just keep going. Okay, it goes, retests, goes and retests. Okay, now we've seen that gold broke the neckline and then came and retested, and we know that when we break a neckline, our target will be an equivalent of the top to the bottom. Okay, to the top of the double top to the neckline region. So if we were to then place this from the neckline, we'll see that we have a target to this point at least. Okay, we have a target to this point, and if it reaches this point, it might even just come and kind of retest the line here, right, the trend line. So let's say it takes a couple of months to reach this region. We will then see it maybe testing this trend line in order to continue buying. Okay, so this might happen maybe in 2023 or 2024. Okay, so it might trade down to this down to this trend line. So that's the principle of the double top. Okay, you have to remember this from when we were studying the double top and double bottom patterns, right? When we break the neckline, we are targeting this point, and 90 out of 100 times it always reaches this point, right? So there's a high probability that the market will reach this point, and we can see that the market has been on a very powerful downtrend, and the market is not relenting. So let's just look at this, and yeah, this is our first point when analyzing gold, right? Now let's just scale down to a lower time frame and just delete this guy here. Okay, so we can see that the market came, okay, and kept making lower highs and lower lows. Let me just draw a trend line here. Okay, so let me draw this trend line. Let me draw it here, like this, and we can see that the market came, and when we take our Fibonacci tool and draw from here to here, we see that it almost touched the 50% retracement. When we start from here, we see that it touches the 50% retracement, right? And then it continued selling, and then it came low from here, and we can see that it touched the 61% retracement level, and it kept selling. Okay, then we can now see that after coming here, it stalled a bit and then broke this trend line. So it broke this trend line, and we can see that it's now thinking of coming down based on my own opinion, right? Because why did I say so? Here, right here, we have an inside bar. Okay, we have an inside bar which suggests that the market will go down. So that's the first point. We have an inside bar here which suggests that the market will go down. Okay, and we know that this trend line has been broken, but we have another trend line which we could draw. Okay, it's possible that we could draw a trend line like this. Okay, so what if the market wanted to come and start coming like this? Or what if the market wanted to come and create a trend line like from this point to this point, right? So if it were from this point to this point, it means when we take our Fibonacci tool and draw down to this point, we'll see that we are exactly at 61% retracement. So we particularly tested the 61% retracement. Okay, so that's something to consider. Okay, that's something to consider. And if I just kind of highlight my important levels, like this level and this level, just keep kind of highlighting them. So let me just reduce the sizes a bit for the meantime. So let me clone this level. So if I just keep highlighting these levels, we will all agree that this is an important level also, because the market came here and stalled here and went up and broke and then retested and came and retested and went up and broke and came and just kept testing this particular level. Okay, so we can see that this is an important level, and when we clone again, we can keep looking at important levels here. So this is another important level. Okay, clone, and then we can see that this is another important level, right? So these are the levels we'll be looking at, and prices will definitely react to these levels. Prices will definitely react in these levels. Okay, that's one thing we should know. And for the fact that whenever the market breaks trend line, it usually retests it, suggests that this might actually go down to kind of retest this trend line which was broken. Okay, that's if it's not going to just continue going down, which is very possible. Okay, so on a weekly we can already see that there is an inside buy, even though the market went down a bit and came here and still came up. Okay guys, so let's just go down to the daily, and for the daily I actually entered the sell here because I saw this day finish as a sell candle, and then this kind of formed like an evening star, right? An evening star. And then when I was looking and then had, for example, a Fibonacci level drawn from here to here, I could see that the market at this point could be going down, and if it kept going down, there is a high chance that it's going to go down to a 50% retracement level or 61% retracement. So it means that also there is a possibility that it's going to go down to this level. Okay, so these are some of the points I have taken in order to take a sell position, even though this is not a retracement per se, but of course could also be a retracement. Okay, so it's a two-way something. If we are looking at it from here to here, okay, we could say this is a retracement. This is it testing the 61% retracement level. Okay, and then this trend line also being valid from here to here, right? And if that's the case, we then see that our sell position or our sell direction has a high chance of being correct based on our strategy. Okay, because our strategy says we should find a trend line, and then we found a trend line, and then our strategy says we should go in the direction of the major trend. Okay, and we found that the major trend is heading downwards. Okay, the major trend is heading downwards, and we had some other points where we looked at our double top and the break of the neckline and the retesting and so on and so forth, and all of these things just coupling together have made me to kind of want to enter a sell position. So if I will enter a sell position here, let's say I enter a sell position here, okay, my stop loss will actually be in a place like this. Okay, even though this is very big, this is 414 pips, and that's the problem with gold. Gold is very volatile. Okay, gold is very volatile, and of course we'll also need to kind of scale down to the lower time frames in order to execute our trade, right? So I'm just going to draw a trend line like this, and okay, so as you can see, guys, based on my analysis, we have a possible sell trade. And one other thing I would normally do is just use a Fibonacci tool and draw it from here to here. And from what I'm seeing, this is also a Fibonacci level, so it's going to be a wise thing to buy, to sell from here also. Okay, so remember, the market doesn't just go once, it goes and retests and retraces. And so if the market was going down and this was the first move and this is the second, or this is the first retracement, we can see that, yeah, it ended at a Fibonacci level. It ended at a Fibonacci level, because if we draw a Fibonacci level from here to here, we see that this is 60% retracement, right? Perfect. So if this was a retracement, for me, I would normally come and kind of draw a counter trend line. Okay, a counter trend line. So let's say this was our retracement, so I'll come and kind of draw a counter trend line. And since this is 4 hours candle, we went up, we tested here, we now went up, and we can see that we now broke our counter trend line and then went up to retest our counter trend line. Okay, so for me, this is a sell. For me, this is a sell. And for my stop loss, I won't put it too far, really. I won't put it too far. So gold is very volatile, and you can see that we are already having a stop loss of 184 pips on our 4-hour time frame, right? And of course, a tick profit of 343 pips. So I want to take a sell trade at this point. And yeah, so I want to have a stop loss of 181 pips and a tick profit of maybe 383 pips. Okay, so even though, guys, I'm still seeing this candle here, which ended as a kind of buy candle, but I think I will still go for a sell, because from what I am observing, this is just more of a manipulation to make you think the market will not sell. Okay, so I'm just going to put a sell and put proper risk management. Okay, proper risk management and all. So I'm going to go to my my currency or my forex calculator. Okay, my position size calculator. Remember this forex calculator, right? So I'm just going to go to my forex calculator, and maybe before I enter, let me just check the news. Let me refresh. We can see that today is Tuesday, 29th November, and we had a US high impact news, and it actually finished well, a little bit well, because the actual is greater than the forecasted. So when we check our currency strength meter, let's refresh. You can also see that USD is of a decent strength. Okay, of a decent strength. So